The Federal Reserve's annual Jackson Hole Symposium is underway, set against the stunning backdrop of Wyoming's Grand Teton Mountains. Each year, this gathering draws the world's top central bankers, economists, and financial leaders, making it a focal point for global economic policy discussions. This year, the event is drawing even more global attention as investors and economists anxiously await signals on the U.S. economy's direction, hoping for clarity amid ongoing uncertainty in the markets. Chairman Jerome Powell's highly anticipated Friday speech is the main event, with markets and policymakers alike tuning in for any sign of what's next. Powell is expected to clarify the Fed's stance on interest rates, inflation, and the overall health of the U.S. economy, as speculation swirls about the central bank's next move. With markets increasingly betting on a possible rate cut at the next meeting, every word from Powell could have a significant impact on stocks, bonds, and currencies worldwide. Financial experts and economists will be dissecting Powell's remarks in real time, searching for any hint of a shift in policy or a change in the Fed's outlook. Political pressure, especially from President Trump and other lawmakers, adds to the stakes, as the White House continues to call for lower interest rates to boost growth. Despite this, Powell aims to reinforce the Fed's independence and its commitment to a data-driven approach, emphasizing that decisions are made in the best interest of long-term economic stability. Recent economic data has shown troubling signs of stagflation, where inflation remains high even as growth slows, raising new challenges for policymakers. This makes Powell's balancing act even more critical, as the markets look for reassurance and stability in a time of heightened volatility. The Fed's July meeting minutes revealed a notably cautious approach, with officials weighing the risks of both persistent inflation and a potential economic slowdown. For now, the central bank is holding rates steady, as concerns linger about stubborn inflation and signs of a cooling labor market, making future decisions even more complex. As Powell prepares to address the world from Jackson Hole, anticipation is building among investors, analysts, and policymakers alike. The financial world is poised for guidance that could shape not just the next few weeks, but the direction of global markets for months to come. Wall Street is in a holding pattern, with the mood across the financial district noticeably tense. Investors and traders alike are treading carefully, aware that any sudden move could have outsized consequences in the current climate. Many are hesitant to make big moves ahead of Federal Reserve Chair Jerome Powell's highly anticipated speech. Major indices have drifted sideways, reflecting the collective uncertainty. The S&P 500 in particular has logged 4 straight days of losses, a sign that caution is dominating sentiment. The tech-heavy Nasdaq has also slipped, weighed down by uncertainty in the sector and broader market jitters. Meanwhile, the Dow managed to eke out a minor gain, but even that was met with little celebration. This subdued trading activity reflects deep uncertainty. Traders are waiting for clarity before committing significant capital, preferring to watch from the sidelines. The underlying fear is that a more hawkish tone from the Fed could trigger a sharp sell-off, sending markets into a tailspin. As a result, many investors are choosing to stay on the sidelines, unwilling to take unnecessary risks. Every signal from the Fed is being scrutinized for its potential impact on stocks, profits, and the broader economy. This underscores just how much influence the central bank wields over market direction and investor confidence. Until Powell finally speaks, expect markets to remain cautious, directionless, and on edge, with everyone waiting for a clear signal. Walmart's second quarter earnings are in the spotlight, serving as a key gauge of U.S. consumer health. Analysts expect strong results, with rising earnings and revenue suggesting resilient household spending. A solid report from Walmart could signal economic strength, giving the Fed more flexibility on rates. In contrast, Target's disappointing outlook and leadership change highlight the challenges facing some retailers. These mixed results paint a complex picture. Some companies thrive, others struggle. Retail earnings offer real-world insight into consumer behavior beyond abstract economic data. As Walmart reports, investors are watching for clues about the broader economy's direction. Meta Platforms has paused hiring for its new AI division, raising eyebrows in the tech world. Despite a massive $72 billion AI budget, Meta cites organizational planning, but investors worry about runaway spending and uncertain profits. With most AI ventures still unprofitable, Meta's move signals a possible shift from aggressive investment to more disciplined strategy. The hiring freeze prompts questions. Is this prudent management or a warning sign of deeper issues? Other tech giants like Google and Microsoft may soon face similar scrutiny as the AI gold rush cools. The focus is shifting from hype to tangible results and profitability. Beyond Jackson Hole, other forces are shaping markets. Oil prices are rising on strong U.S. demand, driven by increased travel and industrial activity. With crude and gasoline inventories dropping sharply, concerns about supply shortages are growing. Political pressure on the Fed is intensifying, as President Trump's criticism stirs concerns about the central bank's independence. This has led to debates on monetary policy. Fresh economic data on jobless claims, home sales, and manufacturing will further inform the Fed's next move. Analysts are closely watching these indicators. These indicators, combined with retail earnings and tech sector shifts, create a complex market environment. Investors are navigating through a maze of data. Investors are balancing risks and opportunities as they await clarity from the Fed. The anticipation is palpable across trading floors. The interplay of rising oil, political drama, and economic signals will set the tone for markets in the months ahead. Market participants are bracing for potential volatility. The coming days could determine the trajectory for portfolios in the broader economy. Investors are keenly watching every development.